Good afternoon, everyone, and welcome to this webinar on quantum computing in financial markets, applications, investments, and prospects. So please be informed that this webinar is being recorded. You all have your microphones and cameras disabled by default, but you will be able to ask any questions you may have after the presentation in the Q&A box. So let me hand over to Dr. Stefan Kerr, the head of ESMA's Economics, Financial Stability and Risk Department. Stefan, the floor is yours.
Thank you so much, Cecily, and welcome also from my side to all of you for this webinar that we're giving on the publication, Cecily just mentioned it, on quantum computing that we published just over 2 weeks ago. It's a particular pleasure to be able to discuss with you the findings that we have there around this very important technological development that is coming up our way. So clearly, quantum computing is still an emerging technology that actually remains some way from maturity, and at the same time it's advancing very fast. There is a rapid technological advance in this space, and there is a strong interest as a result, both from public authorities, but certainly so from financial market participants. Against the background of this emerging technology, our article looks into the global and EU investment landscape for quantum technologies and assesses their potential operational implications to the financial sector. Clearly, quantum computing could offer, once it materializes and becomes commercialized, large efficiency gains, which could enable fast and more powerful solutions in areas such as portfolio optimization, settlement, risk modeling, risk assessment, and fraud detection, for example. Could also interact with blockchain-based technologies, potentially opening up new avenues for financial innovation. So the potential opportunities are big. At the same time, there is also the risks, and the risks include, and most prominently, pose significant cybersecurity risks. In particular, a powerful quantum computer could undermine certain cryptographic techniques that currently secure financial transactions, communications, and digital infrastructures. So we need to have an assessment around these potential benefits and risks, and we do so against the background of the developments that we see in the market as it evolves. Therefore, we actually take a look at the investment landscape in quantum technologies that we can observe. The global investment in quantum computing technologies, which actually reached record levels in 2025. At the same time, the whole technology, as it stays at an early stage of the development, with a very substantial gap between long-term potential on the one hand and near-term commercial applicability on the other hand, remains an issue in the investment universe. And what comes on top is actually pronounced volatility of quantum computing stocks that underscores the continued uncertainty around the viability of profitability pathways going forward. Now, overall, the developments in quantum computing can have far-reaching implications. That is for sure, and all the more against these implications, it is important that a timely transition to quantum-safe cryptography on the one hand, and also an understanding of the risks and opportunities is achieved by us as authorities. As the technology evolves, ESMA will actually continue to monitor the implications and powerful operational impacts of the technology. At the same time, we try to ensure that the internal preparedness for emerging quantum-related risks is actually achieved and enhanced, including through coordination with other authorities. And following up on the workshop we held on quantum computing at ESMA last year, we will certainly continue to cooperate closely both with the national competent authorities at ESMA many other stakeholders, including, for example, the World Economic Forum and international organizations, and try and bring them together to understand, in particular, the specific impacts on securities markets, where clearly quantum computing has a bearing on the financial system and the wider economy in much broader senses. I'm pleased to now welcome the author of the article, Giulio Bagatini. He's the Risk Analysis Officer in ESMA's Economic Financial Stability and Risk Department. He will bring to us the analysis in greater detail, and I'm particularly pleased that we can also welcome Cyril Gruffat. He's a Senior Policy Officer in ESMA's Markets and Digital Innovation Department, who will then be available to reflect on the findings that we have from a more policy-related angle in our organization. After that, it will be a particular pleasure to open the floor to any questions that you may have, and with that, invite comments and questions that we will be pleased to respond to. So with that, I'm very much looking forward to an interesting event today, and I hope that this is of interest for you. With that, I'm handing it over to Giulio. Giulio, many thanks, and please proceed.
Thank you, Stefan, and good afternoon. So the title of the article again is Quantum Computing in Financial Markets, Applications, Investments and Prospects. And it aims to take stock of the interactions we see of this technology, between this technology and financial markets, and as well as reflect on the potential future developments and implications. So I think it's useful to start with a little bit of background, of a high-level explanation on the technology itself. Quantum computing is a technology that leverages principles of quantum mechanics, so of how subatomic particles work and physics works at very small scales, and it does so to store and process information in a way that is fundamentally different than what classical computing does. In particular, a qubit, a quantum bit, is not restricted to represent two states, so a binary information, but it can represent a combination of a 0 and 1 state, so-called a superposition, until being measured. So this results in a potentially higher information encoding capacity of a system of qubits, which is ultimately what a quantum computer is. The quantum computing consists of three main parts. In a very simplified way, the process consists of, first of all, encoding information that we know as classical data into these qubits, then operating on these qubits via the quantum computations, which typically involve quantum gates and quantum circuits, and then measuring the result of these computations in order to then convert this in so-called classical information. So this all is done by designing quantum algorithms, and these algorithms overall have the potential, by leveraging these properties of quantum computing, to reduce the time needed to perform this computation potentially by orders of magnitude, which might enable solving problems at scales which are currently intractable by classical computers. So I said might enable simply because the technology is currently still in development. It's still not mature enough to be commercially available. However, growing interest into this technology has been attracted by the steady technological advances in the last few years. Specifically, financial institutions might well be some early adopters of quantum computing. We see some large US and EU banks, for instance, and also some large asset managers developing investing some resources into studying quantum computing use cases, developing proofs of concept, and running some tests, some studies on quantum hardware. ecosystem for quantum computing and broader quantum technologies, which include also quantum communications and quantum sensing, has been expanding rapidly. So we see growth in financial investments and the new firms emerging. So the industrial and also research ecosystem has been quite dynamic. But one risk that quantum computing may pose is the risk to current cryptography systems, in that sufficiently powerful quantum computer could actually undermine these common encryption techniques, some of the encryption techniques which are currently used to secure access to databases, communications, transactions. So this is also very relevant to the financial system, but also beyond that. So overall, the relevance of this technology for the financial industry and for policymakers as well is twofold. On the one hand, we have the growing value of this industry and the related financing needs of the quantum ecosystem. And on the other hand, we have the potential operational impact of quantum computing on the financial sector in terms of both opportunities and potential risks. So let me start by giving an overview of the current investment landscape for quantum technologies. It's useful to start by looking at the broader quantum technologies, so it's a bit broader than quantum computing only, due to the availability of more data in this respect, but also keeping in mind that quantum computing specifically accounts for most of the activity and most of the commercial value also within these technologies. It is estimated at about 80% of this overall quantum technology ecosystem. So this investment has been definitely growing from a low base, but fast in the last, substantially in the last 5 to 10 years. The ecosystem involved includes some larger technology companies which have their own R&D investment and spending in quantum computing, such as IBM, Alphabet, Microsoft, and Amazon. But also, and importantly, it includes a broad range of pure play quantum computing startups or other quantum technology startups, which are, let's say, more recent companies which focus on these technologies and rely on private or public investment. So looking at public funding, first of all, the left chart shows the cumulative funding pledged, announced by different jurisdictions for the development of quantum technologies. We see that this is led by funds pledged by China, which has pledged $15 billion already in 2022. But then in more recent years, we see that there have been more pledged funds by other jurisdictions, including the EU, the UK, the United States, and Japan. If we switch to looking at the quantum startup ecosystem, which is particularly relevant to the development of quantum technologies, given that these companies are those that contribute to the innovative component of the technology development. We see in the bottom chart the cumulative funding gathered by quantum startups in different jurisdictions. Here it's the United States which leads. This jurisdiction is home to the most dynamic startup environment for these technologies. These data are as of 2024, and the US startups accounted for above 40% of the global venture funding for quantum technologies, and this was led by private investment above all. The European Union instead, it does have a solid base of quantum startups as well, but these startups attracted less funding in terms of both especially in terms of private funding, with a larger public share funding this environment. US and UK startups have also received investments from corporations such as the above mentioned larger technology corporations, which can provide corporate venture capital to some startups. China is mostly missing from this picture, but it's important to mention that the commercial activity in China is a bit more opaque. So let's say there's more limited information on this activity in China, where the development model seems to be more driven by government initiatives. Turning to the venture capital investment in quantum computing startups specifically. This is quite interesting also because we have data set which goes up to very, very recently, and this allows us to have a look at the how this investment developed in 2025, when there was a surge in venture capital raised by quantum computing startups, both in the United States and in the EU. So we see really a amount of venture capital raised in 2025, which was more than double the amount of the previous years, to which also late stage funding contributed with some US companies that are US startups that are let's say in late stage rounds before going public also this year, as we will see in the next slide. Also to note, in the EU there's been the launch of new pure play quantum technology venture capital funds, which contributes therefore to cater to more private investors wanting to contribute to funding the quantum ecosystem in Europe. Overall, these quantum computing startups account for still, let's say, for a minor share of the overall venture capital. It's about 2% in the EU and about 1% globally, but the growth rate has been remarkable. For instance, if we compare this to generative AI startups, generative AI startups were raising about 20 times as much as quantum computing startups in 2024, but this factor decreased to 8 times in 2025. Turning to publicly traded companies, there have been just a few quantum computing, pure play quantum computing companies which went public in a few years ago, specifically between 2021 and 2022. The evaluations saw a boom in 2025 thanks to growing interest from investors, but also announcements of potential government support for this ecosystem. However, we can see from the chart that the valuation, the stock prices of these companies have been characterized by heightened volatility and by what we can call boom and bust cycles. As I was mentioning before, there are at least 3 more quantum computing companies which went public very recently in the last few months, and 5 more, 3 of which are European, are expected to follow as soon as this year, testifying that the interest also for funding the growth of these companies has been increasing very, very recently. In terms of other securities available on the market, 2025 also saw the launch of the first EU-based quantum computing ETFs, which add to 2 further US vehicles. Otherwise, we also analyzed the broader universe of UCITS investment funds, also including tech-oriented UCITS funds, and based on an analysis of fund documentation with also automated screening. There are only just a few other funds which explicitly make a reference to investing in the quantum technology and quantum computing ecosystem as one of their investment themes. So let us now turn to the potential operational impacts of quantum computing on financial markets. And here, quantum computing offers a vast potential range of applications, but also some risks. Also implies some risks in terms of cryptography. So the computational advantage given by quantum computing would be in terms of targeted outperformance of classical algorithms for specific problems, but the let's say theoretically this could involve large advantages and the overhaul of some business processes, but the current capabilities are still very limited, and there are various hurdles still that persist for the implementation of these methods, including the limited scale and stability of quantum hardware and the data encoding into quantum states. In terms of the potential risks, the main risk is the risk that a quantum computer would pose to current cryptography systems. Indeed, attackers using a quantum computer could decrypt protocols widely used in financial services, but also in blockchains and database. One possibility is also that malicious actors harvest data that are protected by fragile, let's say, vulnerable cryptography systems now in order to decrypt them in the future when a quantum computer sufficiently powerful will be available. So this is not a specific finance concern, but it's a cross-sectoral and global concern, which demands a transition to a type of cryptography which is quantum safe and which already exists. It has already been designed. In light of this, the EU member states and the Commission have already issued a timeline that envisages high-risk use cases to be made quantum safe as early as 2030. In terms of the potential applications, let me give a flavor of the main fields where quantum computing could be useful in the financial sector. First of all, there is a field of algorithms which have to do with optimization. In fact, quantum algorithms exist that can tackle financial optimization problems, which include, for instance, portfolio optimization, financial index tracking, but also transaction settlement and other more economic problems, such as predicting financial contagion in a network or finding currency arbitrage opportunities. This is also a domain which presents some potential near-term applications in the sense that these algorithms have been devised to run also on the imperfect devices that are currently either available or in development. And therefore, let's say they hold some promise for a near or medium-term application. A second area is stochastic modeling. The modeling of stochastic processes is key for a number of applications in the financial sector, such as derivatives pricing and risk predictions. But it's a type of algorithms that normally can become very quickly computationally intensive as the size of the problem grows. The quantum algorithms that have been designed could yield a quadratic speed up relative to the currently existing classical counterpart. and they would do so by encoding directly probability distributions into the quantum states. However, also here, a number of hurdles still persist and impose some computational overheads in the process that render the practical usefulness of these algorithms still quite difficult to realize. A third area of application is machine learning models. So here, quantum algorithms are being designed to find patterns in classical data by mapping the data to quantum mechanical states and then manipulating those states using quantum mechanical properties, which makes this type of machine learning much more efficient than the traditional one. And these algorithms can be applied to problems where machine learning is currently used, such as credit rating and fraud detection, among the others. Here, feasibility remains uncertain too, but some methods potentially offer exponential speedups to the classical counterparts. Finally, a fourth avenue for application is the field of blockchains and distributed ledger technologies. Here, quantum computing could have could find different types of applications. It could be used to speed up the proof of work, which is the way in which currently Bitcoin, for instance, are mined, and therefore it could have applicability to the current blockchains. But it also offers avenues for entirely new quantum blockchain with more efficient, faster, and more secure architectures. This can have application for instance, for tokenization, which is an emerging field which is considered relevant to the financial sector, and also other potential financial sector applications such as know your customer processes. So in conclusion, let me give a few words in terms of to summarize and in terms of outlook. So the article shows that quantum technologies are growing in a dynamic ecosystem with investments and commercial interest likely to keep increasing over the next few years if the same trajectory that we have noticed for now remains unchanged. In terms of let's say strategic considerations, the European Union could develop an internationally competitive quantum ecosystem, including through more efficient and integrated capital markets that better support technological innovation, which is one of the key efforts and objectives of the current savings and investment union plan. So this overarching plan can also contribute to developing a dynamic quantum computing ecosystem in the EU, which rivals that in other jurisdictions. The relevance for financial markets could be high, with diverse potential applications, and some large financial institutions already positioning themselves at the forefront of quantum computing research and proofs of concept for potentially for exploiting say being front runners and exploiting a potential first mover advantage. Overall, it's important to note that the timing and the trajectory of these impacts on markets and financial institutions remain highly uncertain, because they are dependent on multiple variables. First of all, the technical breakthroughs that might or might not happen, but also government strategic decisions in terms of funding, the ability of this ecosystem to sustain private commercial interest, and so on. In all of this, regardless of the timeline and the potential, let's say, future developments, it is considered increasingly, there is increasing agreement on the fact that a transition to a quantum safe cryptography, which is already available now, is becoming more and more urgent because it requires forward-looking planning and action to be carried out. So let me stop here. And I can hand over now to Cyril for the discussion.
Many thanks, Giulio. Good afternoon, everybody. I think you can hear me clear and well. Indeed, on my side, during this second and shorter part of the presentation, I will provide a bit more background on a few dimensions that you briefly mentioned, Giulio, that are already also briefly covered in the TRV article, and actually mainly about cybersecurity and the policy dimension that Stefan Kern referred to at the beginning. Before that, I believe that it's important to have the European Commission strategy and quantum computing in mind, because it will contribute to set the scene in the EU, especially for the EU financial sector. You may remember in 2024, the Draghi's report on European competitiveness, which stressed that quantum computing was one of the critical technologies where the EU is lagging behind. And we have seen this in Giulio's presentation, especially in comparison with the EU, the US or China. And therefore, the year after, the European Commission put forward its cross-sectoral quantum strategy, with the intention maybe to foster, as Giulio said, the quantum ecosystem for companies, for researchers, but also to start addressing the quantum computing related vulnerabilities. And for the specific case of the financial sector, the strategy indeed built on the SIU, Saving and Investment Union project, aims to enable a better financing ecosystem and removing the obstacle to cross-border investment in the EU. And this is directly related to the investment landscape you presented about this article, Giulio. Then on this basis, at the end of last year, the European Commission called for evidence on quantum computing. And on this basis, they announced in their work program 2026 that they plan to release a new legislative proposal, which should be entitled the Quantum Act, by the middle of this year, to deal with the main dimensions. So again, research, innovation, investment in the member states, the industry and capacity to produce also quantum technology in the EU, and of course the security, the resilience of the overall quantum supply chain. This is not specific to the EU. This is where we are, but it's important because, as you know, we're explaining, the financial entities may be the early adopters of quantum computing. However, there are other initiatives here and there around the world. I could refer, for instance, to the Project Leap of the BIS Innovation Hub. I could refer to various research papers, opinions, expectations as well, published by some competent authorities here and there in Singapore, in India, in Israel, in the UK as well, and the G7 recently. For ESMA, an important forum from that perspective is IOSCO. Because IOSCO is already facilitating the cooperation across securities and markets regulators, supervisors, to better understand the applications, to better understand the vulnerabilities in the financial sector. That's interesting because all this should end up with a consistent approach overall. Then, if we can go to the following slide, please, Giulio. Indeed, my intention is to dig a little bit more on the cybersecurity dimension. It is a cybersecurity threat. We know that on the quantum day, those quantum solutions, quantum computers, are sufficiently powerful, they will break the encryption schemes which are used today. And Giulio refers to this scenario, harvest no decrypt later, where malicious actors can steal then store some encrypted data for decryption at a lesser stage on the post-quantum cryptographic solutions are available. And therefore, the European Commission has published its recommendations to member states to implement a coordinated roadmap for this transition to PQC, especially giving some rules to the ENISA and the national cybersecurity agencies in the different member states. It was in 24. The same year, you may be aware of this publication from the US National Institute of Standards and Technology, the NIST, defining some post-quantum cryptographic algorithm standards, and at the same time stating that the traditional public key cryptographic mechanism should be disallowed and perhaps obsolete by 2035. All this is not completely new. You see with the graph on the slide that actually this is expected since the middle of the 1990s. So there, if we can go to the following slide, I'm not saying this because I want to say that this timeline is the right one. Everything can be much faster. We know this is documented. Again, we've seen like recently with, for instance, with frontier AI models that very well documented technologies can suddenly scale a little bit faster than expected. It can be the same with quantum. However, having a timeline is an opportunity to plan and to anticipate if possible. And from that perspective, in June 25, the NIS Cooperation Group Workstream on Post-Quantum Cryptography published its roadmap for the transition to PQC. Here again, to stress that it will take time to transition and that it has to be properly anticipated. There are two main milestones in this roadmap. In less than 5 years from now, in 2030, maximum, the workstream recommends that all high-risk use cases should be transitioned to PQC. In their terminology, high-risk cases means when the confidentiality must be protected at least for 10 years, and when the transition effort to adopt the PQC may be greater than 8 years. And of course, at the same time, if the impact of a potential incident is greater than is high, then it's a matter of risk assessment. But we might refer to some specific use case, such as a payment services, data transfer, for instance. And then the second milestone, where every use case should be transitioned to quantum safe upgrade. But here, actually, what's crucial in such a roadmap, I would say, are rather the intermediary steps. And they refer to the maintenance of inventories of assets that perform cryptographic or that have cryptographic operations performed on them, and then to map the dependencies, internal dependencies, third-party dependencies. So it's super important for the entities to anticipate that and consider the whole supply chain. All this should fit what they call quantum threat to cryptography assessment. So basically, to ensure that the entities take into account the quantum risk in their overall risk assessment. And the consequence of this is that the entities should progressively invest in PQC solutions once they are available and more mature. Of course, this can be done step by step as part of other IT investments. That's the most important in such a roadmap. Then to finish with a more purely policy dimension, if we can go to the following step, please. I want to come back a little bit on the current EU regulatory framework. So there are not so many references to PQC, quantum computing, in the existing regulations, but if I refer to NIS2 directive, for instance, or DORA, they already require the entities, and especially financial entities, to adopt cybersecurity risk management measures, including on the use of state-of-the-art cryptography. And in DORA, actually, there is even one explicit reference in one of the urges, DORA urges, to threats from quantum advancement. So this is already taken into account. Next to that, there are more specific regulations, such as the Cybersecurity Act 2, requesting ENISA to contribute to the development and evaluation of cryptographic algorithms, in particular in the area of PQC. So there is a specific mandate also that to facilitate the transition. I don't want to forget potential other regulation which may not so explicitly refer to quantum, like, for instance, the Cyber Resilience Act, CRA, but those regulations may lay out some horizontal cybersecurity requirements as well. And for instance, for the CRA, regarding the products and services with digital elements. For an authority like ESMA, which is both a regulator and a supervisor, all this is quite fundamental and important, and will continue monitoring those evolutions, those technological evolutions, and to ensure that the financial regulations applicable to the EU financial entities are still agnostic and up to date, future-proof, and applied effectively by the financial entities and by the supervisors. And this, of course, with the two other ESAs, the EBA and EIOPA, to promote supervisory convergence towards quantum computing. With this, I thank you for your attention, and I hand over to Claudia Gagliano, head of the Consumer Sustainability and Innovation Analysis Unit at ESMA, to drive us through the potential question. Thanks again.
Thanks a lot, Cyril. Good afternoon also from my side. Thanks, Giulio, for the presentation. It's now time for questions, so feel free to post your question in the Q&A, in the chat, and we will reply. Maybe while we are waiting for the first questions, I'll take the opportunity to ask a question. And my question to Giulio is the following, and it's related to the different quantum-related technologies. So in your presentation, you focus mostly on quantum computing potential application in the financial sectors, but you mention as well other quantum-related technology like communication and sensing. So my question is, what could be the potential applications of these quantum-related technologies in the financial sector?
Yeah, thanks, Claudia. So yes, it's also interesting to look at quantum communications, for instance. Here, technologies such as quantum key distribution can be used to implement more secure exchanges, communications. So this can be applied to cryptography to have more sophisticated and secure cryptography systems, but also to communication channels such as those used interbank or settlement instructions, transactions. So this technology of quantum key distribution can become quite relevant for the financial sector as well. Just to clarify, this quantum key distribution does not form the basis of post-quantum cryptography. We already have methods that, let's say, use traditional cryptography, but that are resistant to attacks performed by quantum computers. So quantum key distribution would be, let's say, a complement to these methods.
Thanks a lot, Giulio. Let me remind all the participants that if you'd like to ask a question, you need to write them in the chat. So please feel free to do that now if you have any questions. Otherwise, let me remind you that all our publications, including the article presented today by Giulio, are available on our website. So on the ESMA website, you can find all the risk monitoring and risk analysis publications. So if you are interested, just go there and you can download all our publications. Since I don't see any questions in the chat, let me check again. I would like to thank you all for your participation. Let me thank Giulio for the presentation and Cyril for the discussion and Stefan for the welcome remarks. And we can close the webinar and have a very good day. Bye.